Rick, what do you make of these numbers? Some of these consumer companies, not just beating earnings expectations, but absolutely bludgeoning them.
Brian, I hats off to Nike. They literally ran away with it. Pardon the pun on words. What an incredible blowout. I mean, their last fourth quarter wasn't so great. On the record, it was bad. But the first quarter just shattered everything you could possibly imagine, which bodes well for retail. You know, we've been struggling a little bit overall. And to hear the good news from Nike, particularly the 82% digital growth, which is now 1/3 of their overall sales, which puts them ahead of plan for what they wanted to be in digital. So that was great. The China 6%, that's huge. U.S. market was down 2%, but that's not so bad given everything that's going. Anytime a company can post record revenue and have earnings like this, it's just stunning. Absolutely stunning. Give them a lot of credit. Congratulations to all the people at Nike. Stitch Fix, on the other hand,
and by the way,
problems.
Wall Street Rick has got to jump in here because Deutsche Bank just moments ago on the tape upgrading Nike shares to an overweight and raising the price target to 151, which is about 15% more than the current price target, even with the after hours move. So it's at 132 in the pre-market. So they see 151. So very bullish there on Nike. And here's a hard story to tell, I guess, because there are millions of families that are suffering greatly. We know the unemployment rate. Nobody is making light of anybody's situation. Trust me. However, for those of us who are blessed and lucky enough to have consistent employment, here's the reality. We're saving so much discretionary income by not traveling, by not going out to eat, that I think that consumer spending is one of probably the small joys that we can have. Is that kind of how you read it?
Yeah, traditionally, Brian, history will tell you that the retail sector is the first one to dive into a recession. We're also the first one to pop out of one. And I think what you're seeing with Nike is the beginning of a pop. People have been able to figure it out. Companies that have been able to do it, like Nike, they're going to do very well because people would like to spend. And, we're stuck at home buying online. That'll change. People will go back to the stores eventually. But I would look at this as a very positive sign. You know, our sector.
But Rick, will it turn? Will it turn? We've basically been in a 6-month snowstorm, right? I mean, stuck inside. And we will be out at some point. Will it turn?
It'll turn. You know, everybody's talking about what shape the recovery is going to be in. Are we going to be L-shaped? Are we going to be K-shaped? Recovery is recovery. People would like to get back to work. Our sector is suffering a little more than most. We still have like 655,000 people in retail that are out of work. And hopefully that'll change. People will get back to work. People will shop. And we'll lead the parade. That's what we want to do, Brian. We want to lead the parade. We want everyone out there shopping. And then, people are talking about the holiday season already. Deloitte said up maybe 1 to 1.5%. You know, you're talking about like $1.4 trillion of spending in the fourth quarter. That'll do it. That'll help.